All right, so we made it this far, so we're gonna keep it going. This section we're gonna speak about demand zones. When you hear demand zones, you need to think about buying. We know we got uptrends, downtrends, and we know we went over support and resistance. Demand zones are connected to buying because you got your buying, you're selling. Demand zones is where the higher lows of the uptrend. So we know higher high, higher low, higher high, higher low, higher high. The higher lows, that's where they're created, and that's where we are trying to get in a trade. We are trying to gauge where that next higher low is going to be so that we can be on the right side of momentum to keep pushing up. Because you don't want to get in the trade high and then have the trade retrace and then start going in your favor. You just want to go ahead and be in where that retracement happens. So therefore you get more out of the trade. It's like anything. Like you don't want to buy high. You want to buy low, sell high when you're buying something. So let's take a look here. As we know, uptrend has bullish momentum. We look at our chart here, we got a resistance area that then sells. We had a downtrend that was created off of this resistance. That, guess what? Created a support. From that support, we then knew, hey, started buying up. And the way you can tell that trends are changing is if resistance areas are being broken. Resistance. They're all being broken. These are all being broken by our price. It was all broken. And an even stronger confluence that's saying, hey, trend has changed, is if you can see where there is a break in resistance to where that downtrend started. So this is even stronger saying, okay, we started selling from here. This was a strong resistance. So it came here and stopped and it sold. But then we broke out. So hey, now we're saying, yeah, we're definitely in an uptrend. We're showing an uptrend. The market has shown its hand. So now let's break down how to identify demand. Now, I'm just gonna draw it up. I'm gonna explain how I draw it, why I drew it this right here. We're just gonna get to what makes this particular area demand. First things first, you got a breakout that is attached. You got a demand zone that is attached to a breakout. There's also a gap in the market here. This area right here. This area right here is what we call a gap in the market. Because immediately after this breakout candle, this candle did not come back and tap this zone. So that's what makes this area, one reason that's what makes this area valid demand, because that next candle, which is what you, after you've drawn up your demand zone, and after the breakout, you're paying attention to this next candle right here. This next candle right here never did this move. did not come and tap this zone. That wick didn't come and tap this zone. I'm gonna try and get it to go straight just so there's no confusion. But you should get what I'm saying here. Boom. It did not do this move. This candle's wick did not come and tap into this zone immediately after the breakout candle, deeming valid demand. Now this is where, like we're said, we're waiting to see price come and react here to some extent, and then keep buying. So let's just take a look, see what happens here. We got price came, tapped this demand zone, and then guess what it's going to keep doing? It's going to then start going up again. So what does that look like right there? Low, high, higher low. We got a new high. And what do we say? Higher high, higher low, higher high. These higher lows have demand zones, which the price retraces to these areas, taps into that, and then it keeps pushing up. Now, we don't know when these movements will happen. We're just anticipating them to happen during our time frame, and we're drawing up areas of the market where this may happen or it may not happen. So let's take it back and let's see how to draw up this demand zone. Now, you're looking at a demand zone. You're looking for a bearish candle. Then you're looking for strong bullish momentum. You want to draw, get your rectangle tool. When you're on TradingView, you're gonna come over here, get your rectangle tool. Mine is just already in my favorites. You start at the top of this candle's, the top of this candle. So for this would be here, the top of this wick, to either the bottom of this wick, the top of this candle's wick to the bottom of the candle's wick, or to the bottom of the buying candle's wick, or the lowest point where that buying momentum started, whichever wick that may be, whichever one of the two. What I mean by that is, let's say that this candle, this selling candle's wick was something like this. Our rectangle or our demand zone, demand box would just go here. Since this candle's the start of that bullish momentum, that candle's wick is lower, we're going to draw it there. Now, let's say this candle's wick was lower than both. It's okay. We'd still just bring our demand zone to this low. Right here. To that low. And we would keep it pushing. Now, that's how you would draw that demand zone. So let me bring this back. You got the top of this wick to either the bottom of this candle's wick, this sell candles. You start at the top of the last sell candle before the bullish momentum. So the top of this sell candle here to the lowest point of where that bullish momentum started. Now that will either be connected to this candle or those next two candles is as far as I'm going, maybe 3. So like say there was another candle here and it was lower than all of these and it kept going. But I personally only like to combine about maybe 3. It gets iffy for me around 4. I only like to combine about maybe four candles. Um, Saying like when I say that, like let's say that there was a candle here that there was a candle here that started and price just kept going up from there. I would draw it to the bottom of this candle. But we got our bearish candle, that last bearish candle before the bullish momentum up. That last bearish candle before the bullish momentum up. You draw it from the top of that last bearish candle to the lowest point to where that bullish momentum started, either being the low of the bearish candle. If it's lower than the bullish candle's momentum start. This one, the bullish candle, or the bullish movements candle was lower than our last sell candle. So then the next thing you want to look for, okay, we see we got a break. So before, I mean, yeah, you can go. I like to go ahead and draw my box and wait and see what that next candle does. Now, when you're drawing these, you need to be very, very specific. You got to get all the way down and make sure you got it directly on these wicks, because you need to see exact price points. You need to see exactly where this is. You don't want it to be like this and then these wicks come tap here, but it doesn't actually tap the correct spot on the demand zone, because then you'll be in a trade and that you don't want to be in. Same thing with the bottom. You don't want to be something like this and then the zone is, it shoots through the zone, or it just doesn't. That's not right. You have to be exact with these zones, because it's important when trading. You have to be very precise, very, very precise. Everything is very precise, because these are numbers. They add up. You got to be very precise with numbers. So let's look at ways this demand zone would be invalid. We know that if this next candle after that immediate break was to come and shoot down and not leave a gap after that breakout, we know it's invalid. Let's say let's look at here. Now let's look at this. Let's look at it before we even get to those points of where, let's say the demand zone had something that looked like this here. Let's say this happened, right? This right here wouldn't be valid, because yeah, you got your last selling candle and then bullish momentum happened, but this demand zone is weak, because we seen, hey, price already tried to come out and it created a wick and closed back inside, and it would have closed back under or closed back inside this zone. So we're just saying here, like here, let's just take a look at this. This is exactly what I mean. This is exactly what I mean. So yeah, we got a break of resistance here. We got to break a resistance here. We got a bullish move, break a resistance. We can even take it back here. Let's just take it here. We got a bullish move. Got our last red candle. We got a bullish move, and we also got a break of resistance here, right? This is exactly what I mean, though. You don't want to see this. You don't want this because price went up, tried to get out of there, rejected, came back inside. They left a wick here. But yes, it did then go and buy up, but this would be low probability demand causing this. It eventually will shoot through there. See? Low probability demand. Yeah, you could get some out of there, but this just doesn't show strong bullish. It's not strong. It's not a strong area for buyers. So let's go back to our example over here. All right, we got our bullish. Boom. So that's why our zone is valid, because you got no wicks in the way after this. You got no wicks in the way. You got our last sell candle attached with a strong bullish move attached to a breakout. When I say attached, this is the area that's attached to this breakout. There's a gap in the market, and it comes back here now, and it gives us a tap. Now, another way that we know this would have been an invalid demand zone is this right here. Let's say this candle's wick shot through. It shot through here. It shot through there and whoops. It shot through there and went below our lowest point where we said, hey, this is where the bullish momentum started. It smoked through our zone. So then we would, if it was to do something like this, we would erase this zone and we would say, hey, we're not looking for a trade. We're going to say that zone is invalid. That zone is invalid. Now, if you can see that next zone, like something like this, but we're not worried about that right now. Yeah, that would be valid, yes. For all the people who saw that zone and say, hey, would that be valid? Yes, that would. But we're speaking about this zone only right now. This is for our example right now. So if that would have got smoked through, we would say, hey, this is invalid. We are no longer looking to enter a trade and look for buys going back to the upside. But guess what? It didn't do that. So this is a completely valid zone because this wick did not shoot through. It came, tapped our zone. We got our reaction. We got a reaction that we liked. And it also never. So then, hey, we got this. So now we're looking for our entry. Our entry, we're looking for a break of a candle. Break of that candle's high. So once we get our tap of the zone, we got our tap of the zone. Our entry we would start doing this right here. Looking for that break of that candle. Once it taps, The next candle we're putting our stops below this candle, and we're looking for a break of this candle's high. So boom, that didn't happen. So now we're looking for this here. Move our stop here, look for the break of this candle's high. Now, in this scenario, this candle, because this is a trade I took, this candle opened, went down, created a lower wick, and then it broke this candle's high. So this is where we're in our trade. We're looking for a 1-to-1 scenario. So we got our tap of our zone showing valid demand. Now we're looking for the break of the candle, the next candle that breaks the previous candle's high without blowing through this zone and making it invalid like we said. We don't want none of these candles wicks to break this zone. So if this candle would have smoked the zone, yes, it's still invalid. If that, we wouldn't be looking for buys anymore. Now, this candle, you'll see in real time these candles are forming. This candle opened, it went down, went lower than this candle's wick. So that's when you open up your stop loss. You open your stop loss up to the, we just want to keep our stop losses below the previous candle's low. But let's say our candle here wicks down and breaks this candle's low. We're going to move our stop loss, but we're still waiting for the break of the previous candle's high for our entry. And we're going to take our trades 1-to-1 because we have a high success rate. So we can use 1-to-1. Get your money and get out. So guess what? We're just, at this point, we're in the trade. We got our stop loss. We got our TP here. And we're just expecting price to just keep going in our favor. That's a win. We done with our trade for today. This is a 5-minute chart. So once we got here, let's see. This day here, this is 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60. We got an hour. We got an hour for our trade to set up. So I get up at 7. I'm on the market at 7:30. So we got at 8:30. We got a trade possibly about to happen. We're in the trade for 5, 10, 15, 20, 25 minutes. So that's, if you want to look at it that way, that's 25 minutes of your day, or what, an hour and 25 minutes of your day to make however much you want from this demand zone, this valid demand zone. You see, we got our 1-to-1 win, and this is exactly what we're expecting. So to just sum it up, like we said, in a uptrend, we know we're higher high, higher low, higher highs, higher lows, higher highs, higher lows, higher highs. Now, just like we have here at our demand zone, in the real market, you see, price came, reacted, and kept going. We got our low, we got our higher high, we got our new higher low. That's going to create another high. On these higher lows, we're expecting a demand zone at some point to create buying momentum, continuing the trend exactly like we got here. We got our break of resistance here. Got this break of resistance, this candle, that immediate next candle. Let's zoom in. We got that immediate next candle here. And if you need to see this resistance, we'll put it back. Got our immediate next candle here that did not come and tap our zone. So this is where we're excited. Or we're saying, oh, okay, we might get an opportunity today. You don't know if you're going to get an opportunity every day. You don't know when you're going to get your opportunity. You just wait to see when your opportunity comes. So now we're saying, oh, we got a break. We got clean demand. We got valid demand in the structure. There's no wicks in the way. It's not a bunch of candles here. You're not combining a bunch of candles to try and create demand. No, you got a solid demand that's attached to this breakout. It never retraces immediately. Then you get your retracement candle, taps into this price area like we said. These are just price areas, but we want to make sure we get a valid touch, a valid tap. That's why you got to be precise on where you're putting your demand zones. And guess what? We started buying again from there. So watch this video over and over and over and over when it comes to your understanding demand. And by the time you've watched it plenty of times, you should understand what you're doing.